on the width of this breakout, or the width of this opening range is 1 cent. You add 1 cent onto the top of that range, as you do sometimes as a measuring tool with triangles and other types of patterns, and that could give you a potential profit target in the vicinity of 134.60. Would you take your profit there? Perhaps you would let the market run through that, and then watch it very carefully and put a stop somewhere right below, let's say, the lows of some of the candles in here. Right below there, it could have a stop there in case it reverts back down through there. At any case, you're looking to take the profits. You're not looking for a long-term position type of trading. You're not looking for the exposure in time or in price. If you carry this forward a little bit, to today, when you looked at the range that was predicted for today that I showed you on the Vantage Point charts, that was more than a 2 cent range. So somewhere in there you'd like to get it. We don't have that same type of situation that we had today. Quite often you'll end up with the wild day, and then you'll have several days of kind of consolidation, rethinking, and so forth. And in those cases, the intraday strategy might not work. But when you're looking at the market overall, when you have those kind of days, and then all of a sudden you get those boom days, then that's a good, good thinking, anticipating, being ready, being prepared for the intraday type of trade that you might want to be able to take, assuming that you can get in the market, get in out of the market in the right place. Now, want to kind of conclude here with what we need to kind of wrap up as far as using intraday trading techniques. The photo I chose here, it kind of looks like one of these Van Gogh Starry Night paintings, but I think probably for some of those people who were involved in the recent intraday trading, or in some of the markets, especially the stock indexes and the currencies and so forth, and especially if you have your account at, or had your account at MF Global, which is where I had an account until it finally part of it was released. But that Starry Night painting might should probably more appropriately be called the screen painting. That's a guy, the painter, who was kind of in an asylum when he painted some of his best works, but he was a lousy business person, from what I understand, selling only one painting in his lifetime before his paintings came to be valued in the millions of dollars. So it's a little crazy, but that's the way the markets are. The markets have been a little crazy. Anyway, kind of a diversion here, but now you got to know what to do if you do want to trade intraday. I think for one of the things you really have to do is you have to be flexible. Situations change, conditions change, and you may have to kind of get out of the mold. You can sit and do the same thing, and wait for the trade, and you have patience to do that. But some people who have to trade or want to trade actively, you may have to be flexible. You may have to expand your risk parameters a little bit to allow for wider swings. You may want to reduce the time down to only a very short term period of time. There are a lot of different ways to trade on an intraday basis using some of the indicator clues that are provided by the end-of-day software. In the current scenario, you expect prices are going to move back and forth, up and down. If you get a crazy day up, quite likely you're going to have some kind of consolidation the next day. It's happened several times, and so you have those quiet days where the market quiets down, where they call it a collapse of volatility, where you have several days of that, and then be prepared. You could have the crazy day come back, and you could have a situation where the market jumps through and jumps out of that opening range, or jumps through the predicted high or predicted low, and that could be a potential great intraday trade where you capture some of the moves. It could be the upside, could be the downside. You kind of want to use your indicators to go the way that you prefer, but it may not necessarily go exactly where you want. So you always, again, have to be flexible enough to take advantage of whatever the market offers you. There are some setups that you probably would like to have. You may be more likely to use a breakout situation, or you may want to trade if the market stays within those boundaries. There are a lot of different ways that you can look at it, but you need to kind of have an idea of what you want to do going into the market, a plan, and knowing that it may have to be adjusted as you move along. Then, in the case that we used here, be prepared to fade the predicted highs and the predicted lows. You don't know that they're going to stay within that predicted range, but if you do trade that way, it can be like the predicted highs or lows that I mentioned, or it can be trading channels, or it can be pivot points. There are a lot of different ways that you can use to kind of a revert to the mean type of a trading strategy and be able to use that to your advantage on an intraday basis. Maybe, just when you're looking at it, you might want to, again, trade the opening range breakout. You may not want to jump on your clues immediately. Again, keeping in mind that a day, when you put day, put it in quotes, may be different in different markets. So you need to see, or might want to see how the prices vacillate initially and then catch the breakout. But in any case, limit risk. Limit your exposure to risk either in time or in price. Intraday trading, of course, forces you to put a time frame on it because you're going to be in the market during the day and then out at the close or near the close. And then your charts and your indicators are going to help you determine whether it's a time factor that's going to limit your risk, or is it going to be a price factor that's going to limit your risk. But one of the things you have to do if you want to survive as a trader is to keep your risk exposure to a manageable level. Now, we've rushed through a lot of things, and probably some a little bit more complicated. As I say, it's intraday trading is not the thing that I can do every day, simply because I have other things I like to do. But if you can follow the markets, if you can kind of keep track of what is going on, but keeping in track of the clues that you have, the background clues, the big term trend, maybe in the euro case it's down, whatever it is, you keep all those things in mind. But whether you can apply your techniques will depend upon kind of the setup that you have, the mindset that you have towards trading. But it is possible to then bring that trading level down to the intraday time frame and use those indicator clues that you have from the end of day charts down to the intraday points of entry or exit. Now, if you have any questions, you can look at that number on the screen there. If you have questions about Vantage Point, they can provide more answers than I can regarding some of the Vantage Point details and so forth. But if you have other questions, I know I had a few earlier here, but I don't know if they've gotten away from me or not. And let me just check here. Okay. Okay, I have a question here from India. Could you please confirm the most ideal moving averages for 15-minute charts, and which oscillators do you use? RSI stochastics for 15-minute charts? If yes, okay. First of all, this is not a intraday type of trading software that I'm using. It's end of day, so I don't really have an ideal moving average for the any time frame in intraday, 15 minutes, 30 minutes, whatever it is. So I don't really have that. The question then, as it relates to if you're looking at the dailies, the combinations that are used there in Vantage Point, there's a short-term, medium-term, and long-term. And the Vantage Point computers, the neural network process, has come together to pick out the advantage, the different moving averages that are the ideal combination, for the medium-term time frame. And again, medium-term is relatively short. If you're a position trader, it might seem really short, but each time frame is going to be a little different depending upon what a trader thinks the time frame is, whether it's short, medium, long.